Hi, everyone. This month, I'd like to talk to you about 3 year-end tax planning strategies I'd like you to keep in mind. I know it's only November, but given what's happened this year, it's definitely worth getting on top of this and beginning your planning now. First strategy I'd like you to consider is something called tax loss harvesting. What that is looking at your investment portfolio and selling securities that are currently in a loss position so that you offset other gains that you may have. One of the benefits of this is you can actually offset gains you had in the previous 3 years, apply it against this year's gains or even future year's gains. So there's a lot of flexibility there. One thing you have to keep in mind is this is only applicable to your non-registered account. So you cannot do this in a TFSA or RSP. And the other thing is you have to be mindful of something called the superficial loss rules. So if you make this sale and realize a loss, you cannot repurchase the same security for at least 30 calendar days before and after the transaction. So keep that in mind, speak to your accountant or financial advisor and get on top of this. Second thing I'd like to bring to your attention is charitable donations. It's important for us to get these in before the end of the year so that they apply to our 2022 tax returns. We don't want to wait until 2023 to make the donation because then we'll have to wait up to 16 months before we get that tax credit back. As a reminder, here in British Columbia, for your charitable donation, you can actually get up to 46% of it back as a tax credit. And if you're a high income earner above $225,000 per year, you can even get as much as 53% of it back as a tax credit. So certainly a lot of charities in our need at this point and do make those donations before the end of the year. Last tip is with regards to early 2023, you are going to get new TFSA limit of $6,500 effective January 1st, 2023. And you're also going to get access to your 2023 RSP contribution limit January 1st, 2023. So given the stock market conditions, we're seeing relative low prices. If it's advisable to make contributions to these tax-free and tax-deferred accounts, do those and do those as early as you can. Again, early January 2023. That's it for this month. You can follow me on ltwealth.ca or LinkedIn, Patrick John Caffrey, and we'll see you again next month.